All right, guys. So this is going to be part 2 of the vocabulary terms video segment. Again, Erik Ralph from Remax Partners, Chicagoland broker.
Lewis with Guarantee Financial Berwyn.
All right, guys. So moving on, we got another 10 terms that I want all first-time home buyers, all current homeowners really to understand, because this can some of these terms can actually apply if you plan to sell your property. So. All right, going on with terms number 11. So again, this is going to be combined. It's multiple offers and highest and best. What is multiple offers? Again, we hear this all the time. So it's like, dun, 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 multiple offers, right?
Right.
All right, so multiple offers means that there has been more than one offer presented within 24 to maybe 48 hours. So that means that a seller has been presented more than one offer. That means it could have different sale price terms. It could have different closing terms. So at this point, they typically they can either accept one of the offers if they feel it's a strong offer to accept right then and there, or they can give a deadline where buyers are allowed to submit their highest and best offer. So typically they give you another day or two for buyers to submit their highest offer. So this is where us realtors, we go back to obviously to the buyer, and we can even go back to the lender, so we can put together the strongest offer that we think it's worth submitting for a particular home. I'm sure you guys are seeing multiple offers all the time.
Especially now more than ever. We get calls all the time. What's the highest and best that they could go in? And a lot of the times what happens is if you go up by 5,000, even 10,000 more than what you were asking before, the variance in payment between option A and option B is not that much, because that $5,000 gets spread over 30 years. So your payments are not going to go up $300, $400 a month. So sometimes, depending on how the client feels, it is a little bit better to go up in sales price, just to be a little bit more competitive and still keep that same payment level.
Yeah, I think that's a really great point, just because I feel a lot of times buyers tend to get scared to increase their offer over current ask price,
right.
Just thinking that they're overpaying for a house. It is something really, really common that's happening right now. Don't be afraid. Again, I don't want to encourage you to put offers over asking price at all times, but it's happening a lot more than you expect. So if you're going in there, expecting to haggle $10,000-$20,000 on a current ask price, the chances of you winning a bid is very unlikely.
Right. So especially this market is
right.
It's crazy.
All right, I'll take over property disclosures. Again, property disclosures are statements. So a property disclosure in the state of Illinois, homeowners have to disclose any known defects on the property. Okay, this can be, if you're aware of lead being present in your home, if you're aware of any flooding in your basement. So again, when you hear property disclosures, these are just statements from the seller if they're aware of any defects with the home. There is state disclosures such as the property disclosure, mold disclosure, lead-based disclosure, and radon disclosure. So this is so that you as a buyer, the consumer, is aware of any defects to look further into during home inspections, or this also makes you aware that you can further test or further inspect the property with other inspections as well for the home.
Correct. Yeah, licensed home inspector, they're going to point out the good things, the negative things. Based on that outcome, you decide whether or not you move forward with the property.
I'll let you take over Earnest Money.
So Earnest Money, this is something that as a lender, we deal with a lot. Basically, Earnest Money is a deposit that you're giving the seller in good faith, saying, hey, listen, I want to buy your property. To show you good faith that I'm going to apply for a mortgage, get my loan approved, and see you at the closing, here's a deposit of $1,000, $1,500, $2,000, $5,000. The earnest money is going to vary depending on the negotiations between your realtor and the listing agent. But the most common issue that we have as a lender is when a buyer buys the earnest money in cash. That's a huge no-no, right? So anytime you apply for a mortgage...
What do you mean buy the money cash?
So, meaning you go to your bank, you have $10,000 in your bank account, but you have $1,000 underneath your mattress. So you take the $1,000, you go to the teller, and you don't withdraw it from your bank account. You just give it to them. They give you a cashier's check for $1,000.
So all your funds need to be sourced, basically.
All your funds need to be sourced. So if you're going to pay for earnest money, we need to show that it's coming out of your account as a way of showing that you gave that deposit, right? So as you know, cash, if we don't know where it came from, it doesn't exist. So when you buy earnest money, an earnest money check in cash, and we can't verify the funds that are tied to that, it doesn't exist. We can't use it.
I think to add to that point, one of the things or one of the mistakes I see sometimes buyers make is if you're getting money gifted to you from an immediate family member, which is allowed typically.
It is allowed, correct.
Sometimes, the potential buyer gets money gifted and they give them the money to deposit into their bank account, and that's where they get their earnest money. Is that something that's allowed as well?
So the way that we like to think about funds is as long as there's a paper trail and we could source the where the money's coming from, you're completely fine, right? So right now, we're in February. The very most common source of a deposit is your tax refund.
Mm-hmm.
So if your tax refund hits your bank account and you withdraw $1,000 to buy the earnest money check, we know where that came from. So you're completely fine. So with a gift, same thing. As long as we can verify that your uncle, relative, whoever gave you that money, we're completely fine.
So just to simplify it again, earnest money is the initial down payment you put up front, to confirm a sales contract. We do use this. We improve earnest money, the amount you give during multiple offers, to make your offer also look stronger and actually try to win a bidding war if needed.
And for those that are probably questioning what happens to that earnest money, it gets applied towards your down payment the day of the closing. So that money is a deposit that gets refunded back to you by the seller the day of the closing. The only way that you would lose your earnest money is if you are ready to close, closing is scheduled for tomorrow, and you don't show up, the seller keeps your earnest money because you didn't follow through.
We don't let that happen.
We don't let that happen. So
right.
For the most part, you'll get it back.
All right, moving on, home inspection. I know this sounds kind of self-explanatory, but again, home inspection is basically the act of you hiring a professional home inspector to inspect the issues of a house. This typically happens within the first 5 business days of your sales contract being accepted. So your home inspector is going to go in there. He's going to check your windows, your roof, your electrical, your plumbing, your basement, your foundations. Basically, he's gonna. It's the time that you be able to do your due diligence and make sure that the house is in the conditions that you expected it to be, and you're not blindsided by any major repairs. After closing. During home inspection, again, don't expect every house to be perfect. Every house will have some issues, but at the end of the day, if there's some major issues that are wrong with the house, you do have the right to back out of the deal. You do have the right to negotiate further credits, further repairs. But again, the home inspection is mainly so that you know exactly the conditions of the house that you're getting into.
Yeah, so a lot of people think that, in order to obtain financing for a mortgage, we need a copy of the home inspection. We don't. The home inspection is for your peace of mind, and that's it. We don't submit the home inspection report as part of your submission package to get approved. That's just for your own peace of mind.
All right, you want to take over appraisal?
Appraisal. So again, there's a lot of a lot of questions as to what an appraisal is, right? A lot of buyers confuse the appraisal with the home inspection. So when I tell a buyer, hey, we need to do an appraisal on the property, they tell me, well, I just did a home inspection two days ago. Why do I need to do another one? So the appraisal is to make sure the house that you're buying is worth what you're paying for it, right? So if you're buying a property for $200,000 and the value comes in at $195,000, the bank is not going to give you a loan for $200,000. We will negotiate the sales price to accommodate the appraised value. Depending on the type of loan you're doing, the appraisal could be a little bit more in detail with the condition of the property. and it might require additional repairs like peeling paint or no broken windows, things like that. But for the most part, the appraisal is basically used by the lender to make sure that the collateral is there for the loan that they're giving you.
Yeah, typically, if you're working with an experienced real estate broker, he'll be able to guide you a little bit better as far as if the house would, what conditions it'll pass in, if depending on the financing. And I think that's one of the things that we should be able to add value to buyers, is also be able to guide them as far as like the value of a home. We can check the market to see what's closed, is to better basically advise you on what we think the house is worth.
Right.
So, all right. Go ahead. You could talk about escrow account as well.
So escrow account, this is something that we deal with a lot, even after closing. But in a nutshell, what an escrow account is, it's a savings account that the bank manages to make sure we have enough funds to pay your property taxes when they're due and renew your homeowner's insurance when it's due, right? So part of the other segment, we're talking about PITI, principal, interest, tax, insurance. Your escrow account every single month, we're going to take the portion of the property taxes, put it into your savings account escrow, take your portion of homeowners insurance, put it in there on a monthly basis. Every single month, this account's going to continue to grow month after month after month. By the time your homeowners insurance is due, we have the funds to pay your homeowners insurance. By the time your taxes are due, we have the funds to pay your taxes. Now, your escrow account's going to vary depending on whether or not your property taxes go up or your homeowner's insurance goes up. But we always want to make sure we have at least a 3-month reserve of taxes and insurance at all times in your escrow account. So if your taxes do go up by $40, $50, or $100, we have the funds to cover that increase. So escrow account, you don't worry about paying your own taxes and insurance. The bank is going to do it for you. So essentially, it's a savings account that we manage.
You got it. Reserve account is typically how I explain it to buyers. So reserve account for property taxes and homeowners insurance renewal. All right, next, tax proration credit. So this can be a little bit complicated, but just to kind of simplify it. So when you buy a house, as a buyer, you are eligible not only to negotiate closing credits, but you will be eligible for a tax credit. So this is not to be confused. This credit is not in essence to cover closing costs. This credit is to cover your expected property taxes. So how does it work? At least here in the state of Illinois, property taxes are paid in arrears. So typically it's paid in the spring. The first installment is paid in the spring. Second installment is paid in the fall. So depending on the season of the year you close in, the seller has to give you a credit during the time that you haven't lived in the property and the taxes are actually due. Tax proration typically is based on last year's full tax bill. This can get prorated either at 100%, it could be prorated at 105%, that it is negotiable. But basically what it's going to be used for is for the current homeowner to pay the property taxes during the time that he was living there and when taxes are expected to be billed in the future.
Correct. Yeah.
Let me just read this. I think it makes a little bit more sense. So the seller of the property is supposed to pay taxes from the New Year's Day all the way to the day that the sale of the house takes place. So if you close on a property in May, basically from beginning of the year all the way to May, it's the seller's responsibility to give you a credit for taxes. It's a little bit more detailed than that, which we can obviously go over in person. But in essence, that's what a tax proration credit is. We're prorating the taxes that are due to you from the current seller.
Absolutely. And the next part of this segment is deed and title, right? So one of the most common things is I'm buying a house. I want to add my mom, my brother, my nephew, my dog, whoever to your title, right? You can. Most parts, in order to add somebody to title during a purchase transaction, they have to be blood relative and or a spouse. Which to add somebody onto title, you don't have to be on the loan to be on title, right? So being on title represents ownership. Being on the deed is mostly blood relative, your spouse. And this could all be done at closing Even with the refi, you could add somebody else onto title afterwards. But it's a very
Yeah.
common question.
So deed is basically the official written document declaring a person's legal ownership of a home. So the deed, you will actually get a copy of your deed at the time of closing. So that's the paper or the form that gets recorded through the county that proves to you that you are the legal owner, getting recorded on through the county as the owner of that home. Title refers to the concept of ownership of rights. So you don't have, if I'm not mistaken, you don't have physical possession of title of the home. It's basically the mortgagee that
Right.
holds, or the mortgage lender that holds title during the time that you're paying your mortgage payment on a monthly basis.
Yeah, anytime you take out a mortgage loan, let's say, for example, Bank of America is giving you a mortgage, right? Because they're giving you a loan to buy the property, their name is going to be listed on your title as a mortgagee clause. Very similar to when you buy a car at a dealership. Let's say Capital One finance your car. Well, when you pay off your car, you'll get the title, but it's going to be signed over from Capital One to you. Very similar in the mortgage side too.
All right, mortgage. This is going to be the legal agreement by which the bank expects you to pay the,
Right.
I guess, the loan back, or the
Yeah.
proceeds of the loan back, if I'm not mistaken.
So just to give you an idea as to the way this works, right? Let's say, you boyfriend, girlfriend buying a house. Boyfriend is the only one on the mortgage loan. Financially speaking, the only person on the hook is the person signing the mortgage. So they're financially responsible to pay back this loan. So that's what it is. It's a document stating that you're taking out a loan to buy a piece of property. That property is tied to that mortgage, and it all gets recorded with the county after closing.
All right, and then just to finish off the last term that we really want your viewers to know is going to be fiduciary duties. So again, as a licensed real estate broker, I have a fiduciary duty towards my clients to act in their best interest. So again, your best interest is basically something that, for us to be transparent,
Right.
obviously for us to guide you in the right direction, and just to be completely honest towards you. So I think that's something that, at least to me, it comes fairly easy.
Absolutely.
I believe that's
Same thing for us.
on the lending
Yeah.
side. So I think that's important, because if you don't trust your real estate broker, you don't trust your loan officer, I mean, this transaction can get very complicated, especially if they're not being fully transparent, or they're not offering you full disclosure. So I think, to me, this is a very important word that's not used enough in real estate. So again, it's our fiduciary duty to act in your best interest.
Right. So anytime you're looking to buy a property, especially if you're a first-time home buyer, your real estate agent, your attorney, your loan officer, we all have to be dancing to the same beat, or else it's not going to work. So that's why it's a good way to have a relationship with your clients, with your lender, with your realtor, with everybody, just to make sure that any doubts that you have, I mean, we eliminate them completely. So we explain everything from day one to the day of the closing. And as a loan broker, we make sure that you're getting the best interest rate based on today's market. So, there's a lot of stuff to this, and working as a team just makes it better for you.
So again, that's a wrap. Those are the top 20 terms that I want you guys to really understand and explain. Again, if there's any words that you guys want us to explain a little bit more in detail, feel free to comment on the YouTube channel as well. We'll be more than happy to explain them to you. So again, if you find this information, if you find this video informative, please feel free to share it to your friends and family that are looking to buy in the near future. So again, Erik, Remax.
Lewis with Guaranteed. Any questions, let us know.